Welcome back. I hope you all had a great day. Today, the market broke its 4-day winning streak due to disappointing jobs data. The S&P 500 slid 10.52 points, or 0.34%, while the NASDAQ, which reached a new all-time intraday high, posted a worse loss of 0.69% after a sell-off late in the day. All while the Dow had an up and down day, ultimately ending in the green by a small 0.05%. The U.S. weekly jobless report came out today. This past week, there were 1.877 million jobless claims versus the expected jobless claims total of 1.775 million. Many are seeing these numbers as a sign that we are out of the worst part of the coronavirus-related job crisis. Regardless, the level of unemployment remains high. Continuing claims, which provides a clear picture of how many Americans remain unemployed, totaled 21.5 million, a gain of 649,000 over the past week, which was also worse than Wall Street expectations. In foreign market news, the European Central Bank announced that it has taken its pandemic bond buying up to 1.35 trillion euros, which is an increase of 600 billion euros, as it tries to prop up the economy. The central bank also said that the duration of its crisis bond buying program would be extended from the end of 2020 until June 2021, or until the bank believes the crisis is over. Since it was announced in March, the emergency program has helped keeping borrowing costs lower for countries in the Eurozone. Thursday's announcement contributed to a further reduction in its borrowing costs, with the yield on Italy's 10-year government paper dropping from session highs above 1.56% to 1.4%, shortly after the decision was published. The European Central Bank had previously warned that the euro area economy could contract as much as 15% in its worst-case scenario due to the coronavirus. Note that the ECB did not change interest rates. The sectors reflected the up and down day of trading, as they were pretty much split 50-50 positive and negative. The largest gain came from financials, which continued their surge from March lows. As a whole, they ended up more than 1% on average. The largest loss came from utilities, which lost more than 2% on average today. The table tells us an interesting story about the market today. As a whole, growth stocks were battered today. This reigns true as major tech shares slid. Small and cap value again posted the best days, continuing the recent surge. The largest gainer in the S&P 500 today was American Airlines, which soared more than an astounding 41% during regular hours trading today. Airlines posted a good day as a whole, with United and Delta both gaining 16.2% and 13.7% respectively, as the companies announced plans to ramp up flights in the coming months due to a rebound in travel demand. American Airlines now plans to use 55% of its domestic schedule in July, up from 20% in May. They were the biggest gainer, as they were the most beaten down airline due to serious bankruptcy concerns. Regardless of the airlines, the next biggest gain came from popular retailer Nordstrom. They posted a gain of nearly 9% in regular hours. However, there was no news backing the large gain. The biggest loser today was Dexcom Incorporated, which creates glucose monitoring systems for diabetes. Dexcom fell 5.74% during trading today. No new news was released today to support this drop. However, yesterday, before the market opened, it was announced that Dexcom would be having a private offering of $1.05 billion in senior notes, yielding 0.25%, due in 2025. Next up is D.R. Horton, which fell 5.45% today. D.R. Horton is a home construction company and has been the largest home builder in terms of volume since 2002. Today's gain had no reasoning behind it. However, it could be due to investors taking profits. It could also have been due to the grim data from the Labor Department today, leading investors to believe that new home starts will be lower in the future compared to what was previously thought. Getting into earnings, we start with Slack Technologies, ticker symbol WORK. Slack is essentially a chat room for your whole company, designed to replace email as your primary method of communication and sharing. Its workspaces allow you to organize communications by channels for group discussions and allows for private messages to share information, files, and more, all in one place. Slack had a double beat with EPS beating estimates by 4 cents, coming in with a loss of 2 cents per share. Revenue beat expectations by 13.58 million as it came in with 201.7 million, which represented growth of 49.6% year over year. The company added a record 12,000 net new paid customers, according to its earnings release. However, the company's 50% boost in revenue from last year was not much greater than the 49% increase seen in the previous quarter, suggesting the pandemic is not sparking as much growth for Slack as it is for other companies that make it easier to work from home. Some good news for Slack is that it announced a multi-year deal with Amazon Web Services to offer customers data residency flexibility. Overall, this severely disappointed investors as they sent shares down nearly 15% during after-hours trading. Next up is the Gap, ticker symbol GPS, which is a popular clothing retailer. Gap missed on both EPS and revenue. Their miss on EPS was severe, coming in at a loss of $2.51 per share. This loss missed estimates by $2.17. Revenue was an astounding 43.1% lower on a year-over-year basis, as they came in with $2.11 billion of revenue, which missed estimates by $240 million. Gap currently has 1,500 stores open in North America and expects to reopen the majority of its locations in the region during June, according to a statement from Gap President and CEO Sonia Singhal. Singhal also said on the earnings call that 20 of the company's stores sustained damage due to recent protests. On top of all this, Gap is also being sued by popular REIT Simon Property Group, as Gap has failed to make its rent payments. Investors did not take kindly to this news and sent shares down 5.68% after hours. Lastly, we have Broadcom, ticker symbol AVGO, which is a semiconductor manufacturing company. Broadcom was in line with EPS estimates, coming in with an EPS of $5.14. Revenue beat expectations, growing by 4% year over year, coming in at $5.74 billion and beating estimates by $50 million. Broadcom gave third quarter guidance for semiconductors that, according to a company statement, reflects a surge in demand from cloud, telecom, and enterprise customers, offset by supply chain constraints and an expected substantial reset in wireless. After these earnings, investors sent shares up a bit more than 1%. That is all I have for tonight. I appreciate your time and hope you all have a great night. I'll see you again tomorrow.